Good morning, everyone. Let me know if you guys are able to hear me and the screen is visible to all of you. All right, perfect. Um, so first of all, I would like to welcome all of you to the live stream. This is my first YouTube live stream. We have been streaming for quite some time over Discord, but yeah, this is my first time streaming over YouTube. So if you're not subscribed to the channel, please make sure to do so. Just press the bell icon as well. Just not to miss any notifications. I would be posting regular videos over YouTube, of not just my analysis, but also of anything that any concept that I would find useful. I would try my best to explain it to you. Just create a few videos for you guys. So yeah, it's going to be a very informative journey for all of you over this YouTube channel. So once again, I really appreciate all of you joining in, taking time to join in. We would be having the giveaway as well for 5 free premium memberships. Foxian's monthly premium memberships. We will be having a giveaway for that as well. So yeah, thank you so much for joining in. YouTube is so much better for streaming. Yeah, yeah, absolutely, absolutely. Uh, Definitely. Will this video be open to public after the live stream? Yes, this definitely be public. Just like our other live streams also, unlike a few other Discord servers, all of our live streams, they're absolutely public. They are posted over Foxian's YouTube channel. For those of you who are joining for the first time, have no idea what Foxian is. I'm basically the founder of Foxian. It's a Discord server, where we provide analysis, where I daily provide, all of my updates and all those things. So if you are someone who is following me from Twitter and who has no idea about the Discord server, the link is going to be somewhere in the description of this YouTube video. Please make sure to click that and join the Discord server for more organized feed. All right. And by the time we end this live stream, once again, I would be giving away 5 free premium monthly memberships for Foxian. So yeah, it's definitely going to be a good one. Oh my God, Daddy. Yes, absolutely. We have got a new studio, we have got a new mic and everything. So yeah, it's definitely going to be a good experience for all of you. And I have got such a good setup that people have started complaining that I don't sound like the way that I used to. I actually received like at least 8 to 9 different complaints of people saying that, okay, this is not the old Sherlock, this is possibly some other guy, because that's not how Sherlock used to sound like. But finally I've got a new studio, finally I've got a new streaming setup. So yeah, it's a good thing. All right, so let's start the live stream. We would be talking a little bit about fundamentals. We would be looking at mainly the chart for BTC and ETH. We would be looking at all the other possible aspects of the chart. Uh, yeah, definitely. Free membership giveaway, it's a good thing. All right, so let's talk about BTC. Where exactly BTC is headed towards? Okay, I would be dissecting, all parts of this chart one by one, giving away everything that I have in my mind about this chart, because there are so many things happening right in front of us on the chart that we cannot simply just ignore that. Okay. So first of all, just like we always do, let's talk about all of this in terms of structure, right? What exactly is happening in terms of market structure? First thing we need to do is, just immediately map out the market structure. Just immediately map out the market structure. So if we talk about the market structure, it has absolutely been bearish, as you can actually see. The market structure shift, it happened back on Friday, 14th of June, ever since we broke below $66,000 region, we have continuously been bearish. Okay, so this was your first indication that, a break and 4-hour candle closed below $66,000 region, that the bearish momentum, it's going to continue for a while. Okay, and those of you who are watching me for the first time, I absolutely love to talk about market structure. It's something that's, it's something that's extremely fundamental to my analysis, to be talking about market structure, because that's something that would be giving you an ultimate confirmation about where exactly market is headed towards, and especially the range that we are in on BTC. It's definitely a good idea to look at market structure. Okay, because market structure, it has absolutely been playing like, a bookish, has absolutely been giving us some bookish moves. You talk about the 4-hour time frame charts, or even if you talk about the smaller time frame structures, they have been playing almost bookish setup. They have been giving you almost bookish setup, right? So, the market structure shift to bearish happened back on 14th of June. We had our first break of structure. We had our second break of structure. We had a third break of structure, fourth one, fifth one. And the last one happened, as soon as price broke below $56,800 region back on 4th of July. Okay, back on the Independence Day, right? So back on 4th of July, we had the last break of structure. And now, anything that's happening in between these two spots, anything that's happening in between these two levels, that's very much an internal structure. So if I just map it quickly for you guys, this is going to be a major swing low, and this is going to be a major swing high. Okay, so anything that's happening in between these two levels, these are basically these two levels, this level right here at 54,000 and this high right here at 58,700 or 58,800. These are basically external structure levels. Okay, external structure points. Anything that's happening in between, it's absolutely non-relevant, I would say. In terms of market structure, it's going to be something that's, non-relevant. Obviously, if you talk about chart patterns and a few other things, all of that we would be talking about shortly, but obviously it would be much more relevant. But in terms of market structure, anything that's happening in between these two levels, it's absolutely, once again non-relevant, because if price would break below 54,000, and if you guys remember the definitions of break of structure or change of character, breaking below or breaking above a certain level, it's not really that important. We need to have proper candle closes as well, because if price only wicks below this level, this would not really be considered as a valid break of structure. It would simply just be considered as a liquidity sweep. Similar is the case above this high as well. So these are basically your two external structure points. If price breaks and closes below $54,000 region, then obviously, this would be an indication that the bearish momentum, it's going to continue for some time. Okay, and if price breaks above, now this is a very important thing, because the $1,000,000 question is that if the bottom is in or not. Okay, and if price at any point, in terms of, if we talk about all of this in terms of structure, then if at any point price breaks and closes up 4-hour candle above 58,800, then the whole market structure, after such a long time, it would be shifted back to bullish, and we can very much start taking long positions. Okay, I have been still recommending people that, instead of just trying to jump into long positions, possibly just wait for price to give you a clear direction. Okay, just possibly wait for price to, instead of just saying that okay, the bottom is in, we would be talking about a few other important indications that may point out that the bottom is in for this move downside. But we need to be looking at the market structure as well. And in terms of market structure, you definitely need to be waiting for a 4-hour break and candle close above 58,800. Only if that happens, you can start aping into long positions, or you could at least start saying that okay, the bottom is in for this move. But another important thing is that there would be this very strong resistance area that we would have to clear, and at least there is 80 to 70% chances, there is high probability that price would have a strong rejection around here. We would be talking about the rest of the fundamentals, rest of the technicals as well, like support, resistance, in terms of chart patterns and all that. But if I explain it to you once again in terms of market structure, it has very much been bearish ever since price broke below $66,000 region. It continues to be bearish. we are in the formation of we are in the process of formation of this internal structure. Anything that's happening in between 58,800 and 54,000, it's very much non-relevant in terms of market structure. If price breaks below $54,000 region, once again in terms of market structure, this would be an indication that the bearish momentum it's going to continue for a while. If price breaks above 58,800 and gives a 4-hour candle close above, then this would be an indication that the market structure shift has happened and price is now shifting towards a bullish momentum. Okay, so again, in terms of market structure, you could have taken a short position around here. All you had to do was simply just take out your fib tool. As we already know, I have from time to time explained this thing during my Discord live streams also, that people usually have no idea how to use the Fibonacci retracement tool. It's such an important tool. It's such a useful tool. People would just, open up a random chart and they would start drawing the Fibonacci retracement tool. But that's not really how it's meant to be used. It's only meant to be used on some sort of an impulsive wave, right? Okay, it's a good thing that we went to $58,000 region. We actually came close to this spot. We actually came close to breaking above 58,800 last time as well, but we failed to do so thanks to German government, thanks to Operation Barbarossa. I would say once again they are continuing to be they are actually continuing with their major sell-off that's been happening for the last like 5 to 6 days. So once again, in terms of market structure, you could have taken a short position around here. You could have taken a short position around here or around here. All you had to do was just simply take out your Fibonacci retracement tool, map out the market structure, be able to differentiate between an impulsive and the corrective waves, and always remember that the Fibonacci retracement tool, it's meant to be used with impulsive waves and not corrective waves, which means that you simply just cannot take out your fib tool and start drawing it somewhere randomly on the chart. The first thing you would have to do is just map out the structure, in order to get an idea if the order flow is bearish or bullish, and then you would try to map out the impulsive and the corrective waves, and then you would start drawing your Fibonacci retracement tool on the impulsive waves in order to find out the length of the retracement waves. Okay, so as we look at the order flow, this has been absolutely bearish. So once again, all you had to do was just select your Fibonacci retracement tool, select the start of the impulsive wave, end of the impulsive wave, whatever level that you give importance to. It could be 0.618, it could be 0.705, it could be 0.786, and just start taking entries around here. Your entry model, it could be absolutely different. It could be based upon multi-time frame analysis, it could be just based upon taking the entry straight away. But instead of saying that this is still bullish momentum going on, or instead of just keep on sticking to the statement that okay, the bottom is in, why not simply just enjoy the move downside? Okay, that's what I always recommend to people, that instead of trying to catch the knife. And this is a very popular statement also, that people love to try to catch, or people love to try to predict bottoms in a bearish market, and people love to try to predict tops in a bullish market. So it's price is going downside and everybody is doing their best to try to predict the bottom for this move, but nobody is paying attention to the fact that we went from 72,000. This was a perfect short opportunity, and for those of you who were in the Discord server, they would remember that we did take a short position around here, although we chickened out of that short position a little bit too early around 66,000, but that was a very good short position, and that was a very good indication. The formation of two equal highs around here, it was a very good indication the market is going to move downside from around here. But if we talk theoretically as well, instead of just trying to catch the bottom in a bearish order flow, you should be trying to catch the downside move. Okay, and all you have to do is once again wait for the retracement waves, back to any of the levels that you find important, and just try to catch the move downside. So coming back to the structure part, the structure, it has been absolutely bearish for quite some time, and once again, people have been talking about a lot many other things, that for example, the huge buybacks are happening, there is a formation of double top or double bottom around here. We would be talking about all of that, but looking at it from the structural point of view, I'm not bullish, until and unless price gives a 4 hour candle close above 58,800. Okay, just try to analyze all of this information rationally. Just try to analyze all of this information logically instead of saying that okay, the bottom is in. We were saying the same thing around 60K. We were saying the same thing around 58K. We were saying the same thing. We have been saying the same thing around 53K or 54K as well. But we need to look at the facts logically. Although, in the second part of the live stream, I would be explaining to you, speaking in terms of the other fundamentals, speaking in terms of other technicals, that why do I exactly believe that the bottom could be in for this move? Okay, we would be looking at all of those things, but in terms of structure, you need to break and close above 58,800. Okay, now let's talk a little bit about the other fundamentals also. So first of all, uh, you know all of these moves that you would look right here on the chart, all of these are very bookish moves, right? You talk about support and resistance. You could have caught all of these moves if you were if you were only able to draw support and resistance levels correctly, and if you had only paid attention to the fact that the first retest of a level, they are extremely important. This has become a statement that I repeat over and over again during my live streams also, that the first retest, it's always your single best opportunity to take a long or a short position. We would be looking at that. Okay, so first of all, as you can see, this was a strong resistance area. Price was getting strong rejection from this resistance area in the past. Price breaks above this resistance area, gives you your first retest. This was your long opportunity. Gives you the second retest. This was your second long opportunity. Then finally breaks below, consolidates a little bit, gives the first retest. This was your first short opportunity. Breaks below this resistance area, consolidates a little bit, comes back, retest this resistance zone. This was your once again another short opportunity. So in terms of this level also, why do I say that there is every possibility if you wish to be extra cautious? For example, a lot many people have been asking me in the DMs as well over Discord that they need to deploy cash into the market, but they're not really sure. Okay, and to every single person I responded the same thing, that first of all, you need to wait for the market structure shift, which would happen as soon as price breaks above 58,800. And if you have a big enough capital and you wish, if you feel an extra responsibility towards that capital, towards the protection of that capital, then you should ideally wait for the flip of this level. Because, even if we have a 4 hour candle close above this above 58,800 level, we would be in a sort of situation which I call sandwiched situation. Okay, so this is a term that I introduced myself. It's a sort of situation where you're actually caught between a very tight, a very narrow range in which there is an immediate support down below and in which there is an immediate resistance right above you. Okay, so in this situation as well, even if price breaks above this area, we are not immediately going to be bullish. Okay, this would simply just be an indication that okay, the market structure shift has happened, and the next shift to bearish would only be happening if price breaks below 54,000. So I'm not saying that as soon as price breaks above 58,800, that's where you need to enter. That's going to give you the best possible risk to reward ratio. And always remember this thing. You could be saying that the bottom is in and we should have bought at 53K and we should have bought at 54K or 55K, and we should not really be waiting for the structure shift. I have seen a lot many people, even I do myself, at some occasions I do the very same thing. Okay, and what is it, lamenting over things that have happened in the past, saying that okay, I should have bought BTC around 15K, I should have bought BTC around 28K. Always remember this thing, that whatever decision that you would make in your trading journey, it's always going to have some sort of trade-off. Okay, so for example, if you buy around 53K, 54K, you might be thinking that okay, the bottom is in, but at the same time you would have a better risk to reward ratio. Remember this thing, compared to someone who would be buying as soon as price breaks above 58,800. You would have an absolute better risk to reward ratio compared to that person. But in comparison to that person, you wouldn't really have the confirmation. Okay, so it's completely up to you. Either you wish to wait for the confirmation, and that also depends on what sort of confirmation you are waiting for. For me, market structure shift is something that's absolutely superior to the rest of the confluences that I normally use. And for that reason, I would wait for structure shift. I'm not comfortable buying around 53K, 54K, or 55K. I would simply just wait for the structure shift. And I know this thing, I have made peace with the fact that every decision that I would make, it would have a certain sort of trade-off. Okay. So, once again, if you wish to be extra careful with your capital, even if price breaks above $58,800 region, it's not like it would immediately just break up and go straight to 72K. There is every possibility that price may consolidate in this range for quite some time because we are going to have a fat rejection, in my personal opinion, from this level. Why do I say this? Going back to the original statement that I mentioned earlier as well, that the first retest, it's always your single best opportunity to take a long or a short position, and this was a very strong daily support region. Okay, even if you compare this with the previous break that happened back on 1st of May, we broke below, we consolidated a little bit, there were like 2 to 3 candles, and then we retested this resistance area, we retested this level as a strong resistance area. Okay, so in this situation also, you could have taken a short position around here easily. Okay, at this move around here, you could have caught the move from almost $60,000 down to around 56,000, $55,000. That was an around 5.5% move. So once again, the point here is that the first retest, it always gives you a much better chance to enter into a long or a short position. And I have seen this myself, that the first retest, it's at least 70 to 80% of times it's always the successful one, until and unless you're seeing a deviation move happening, until unless there is some sort of fundamental news. Okay, we would be talking about all those things as well. But in this situation, even if price breaks and closes above 58,800, we would once again be caught up in a sandwiched situation in which there is going to be an immediate resistance right above us, and there is going to be a support down below. And I would not recommend entering into that situation. Obviously, you can say that, okay, I don't really want to miss out on this whole move. Or what you could simply do is that wait for structure shift. Once again, take out your fib tool, just start from the beginning of the impulsive wave to the end. Let's suppose the end happens around here, to the end of the impulsive wave, and then wait for price to at least retrace down to 61.8% fib level. Okay, it's completely your choice if you wish to select 70.5 or 78.6, but I would recommend at least waiting for price to pull back down to at least 61.8% fib level, instead of just buying straight away as soon as price breaks above 58,800. If you would buy at 61.8K, you wouldn't really be compromising on the risk to reward ratio part, because there is at least 80 to 90% probability that price would have a strong fat rejection around $60,000 region, because once again, this is going to be the first retest. Okay, so that's all about the discussion related to the structure part. Now let's take a look at the same chart in terms of the in terms of the rest of the technicals also. Okay, so when price was trading, just a few weeks ago, when price was trading around 67K, 66K, we were moving back and forth between between 72K and 56K, 57K. I was actually a little bit worried about price having not retested this 53K support. Okay, you guys might be a little bit uncomfortable with the situation. Okay, that price is now down to 53K or 54K, but to be honest, I'm actually sitting in a much more comfortable position to how I was feeling exactly like 2 to 3 weeks ago. The reason for this is because if I just zoom out this chart a little bit for you guys, in my personal opinion, we are caught up in a very similar situation that we were facing just few months ago back in January, when price was trading around 38K, when the ETF had just approved and price was once again trading around $38,000. If you would compare both of these situations side by side, we took some time to break above 38K resistance area. It took us like 2 to 3 weeks. When we finally broke above, price went straight from 38K all the way up to 49K, consolidated for like a month or two, and then we finally came back. The ETF got approved back on 10th of January. Price was trading at 45,000. Everybody thought that price would straight away go from 45,000 all the way up to maybe 100,000 or 80,000, but that did not happen. Obviously, price went to 49,000, then came back all the way down to $38,000 region. Okay, so this was, at that time, I was the one saying that, okay, there is every possibility that price would go down and retest the 38K support region. The reason for this was very simple, because there were a lot many imbalances left behind by the price. Okay, you could call it imbalance, you can call it you could call it simply just imbalance, or you could call it the fair value gap. It's completely up to you, but in my personal opinion, price generally tends to revert back to these regions to fill out these huge imbalances, especially whenever there is a huge impulsive moves in either direction. Okay, so in this situation also, there was an impulsive break above 38K resistance area, and I was actually a little bit worried that the first retest of 38K resistance, it had not happened, and secondly, there were huge imbalances left behind by the price because the break above it was quite an impulsive one. Okay, now I have absolutely zoomed out the chart for you guys, and you can compare both of these situations side by side. This was the situation back in January, and this is the situation that we are facing currently. In this situation also, you can actually see that it took us quite some time to break above 52K, 53K, almost like 1 or 2 weeks. And when price finally broke above this resistance area, it was a very impulsive break above. Okay, and price absolutely left quite a few imbalances down in this region, down in this spot. Okay, and 2 to 3 weeks ago, when we were trading around 72K, 67K, just going back and forth, I was worried about two things. The first one was a liquidation event. We will be talking about that later down the stream. But the first thing was that, the first retest of this region, it had not happened exactly 2 to 3 weeks ago. And secondly, there were huge imbalances left behind by the price in this spot. And I was worried that, uh, since price had not retested this level, I was worried that at some point it would go back and retest this area. But at the same time, I was much more confident that since it would be the first retest, and we know this thing, I have mentioned this at least 3 to 4 times already, that the first retest, once again, it's your single best opportunity to take a long or a short position. So in this situation also, when price went down to 53K, 53.5K, this was a very much good, this was very much of a good sign for me that the first retest, it has already happened, and this was a very good opportunity to buy. Okay, so I'm repeating this thing over and over again, that if you did not buy it around 53K, 54K, even though if you are someone who has been watching some of my previous live streams, then that's absolutely your mistake, because I'm repeating this thing that the first retest is always a single best opportunity to enter into a position. So we talked about things in terms of structure mapping, and now we are talking about things in terms of the rest of the technicals. So the first indication for me, pointing out towards the statement that the bottom could be in for this move, is that this was the first retest of 53K support, and this was not an ordinary support. This is actually a very strong daily support, and there were quite a few imbalances left behind by the price in this spot, and all of these imbalances, they have very much been filled already. Okay, the second thing is that, the formation of these two double bottoms right here. If I just move to a slightly higher time frame, 12-hour time frame chart, you would actually notice this thing that, we made two very clear peaks around here at 72K just a month ago or so, just back in May. So we formed these two peaks, these two tops around 72K, and this was a very good indication that we should be taking a short position around here. Now, I'm not really a very big fan of chart patterns, to be honest. But I have a slightly different opinion towards chart pattern. I have a slightly different way of trading these chart patterns, unlike other people, especially if you talk about the reversal chart patterns. For those of you who don't know, there are basically two categories of chart patterns. We have reversal chart patterns, and then we have the continuation chart patterns. Patterns like head and shoulder, inverse head and shoulder, double top, double bottom, they all fall under the category of reversal chart patterns. People would just open up simply any chart, just like they do with the Fibonacci retracement tool, and they would just try to say that, okay, they formed a nice double top or double bottom. But for me, a reversal chart pattern is only relevant if it's formed at some sort of strong higher time frame support or resistance area not in the middle of a trend. Okay, just pay attention to this statement. A reversal chart pattern is absolutely not relevant if it's formed somewhere in the middle of a trend, and it's only going to be an important thing if it's formed at some sort of strong daily support or strong daily resistance. Now you have two examples right in front of you. The first one, it has already played out. The second one might just be in the process of playing out. As you can see, this was a strong daily resistance area. Okay, we have been, we created the last all-time high at around 73,888, and price had the first rejection, second, third, fourth, then the fifth one, then the sixth one, then there was the seventh one, then there was this one. So, no, all of us would agree over this, that this is actually a very strong higher time frame resistance area. And these two peaks, these two tops, they were formed right at this higher time frame daily resistance area, which sort of gave extra legitimacy to this double top being formed. I must repeat this statement once again, that I'm not a very big fan of chart pattern, but I absolutely pay attention to these reversal chart patterns whenever they are formed at some sort of strong daily support resistance area. In this situation, this double top, it was formed at this very strong daily resistance area, and in this case, these two double bottoms, they are in the process of formation at this very strong daily support area. And not to mention the fact once again that this by the way was the first retest of this strong daily support. Okay, once again, just like I mentioned, explaining chart patterns, that I have a slightly different way of reading these chart patterns. I do not immediately trade these, or I immediately do not jump into positions as soon as I spot these chart patterns. What I would do is that I would simply just wait for price to break below the neckline or break above the neckline, and then I would wait for the consolidation part, and then I would wait for the retest part, and then at the time of retest I would enter into a long or a short position. Okay, the very same concept for me applies to the trend lines also. The very in the background music, yeah, sure. Thanks for pointing it out. I was actually realizing that the background music, it's actually a little bit loud. Let me know if it's good now. So, the very same concept applies to the trend lines. The very same thing applies to the support and resistance trading as well. That I would simply just wait for price to break above or break below a certain level, and then I would wait for the consolidation part, and then I would wait for the retest part, and at the time of retest I would enter into a long or a short position. Okay, so in this situation also, if instead of saying that, okay, these two tops, they just got created around here, let's enter into that position straight away, what you would do is that you would simply, because price may not respect the chart pattern, the price may simply just create another top, and then it would become a triple top, and you would absolutely be caught up in a position which not a good one in my opinion. So what you would do is that you would wait for the break of neckline below, wait for the consolidation part, and then you would wait for the retest part, and as we can see, this may have played out absolutely good. Okay, so which brings us to the very same situation around here as well. I'm pointing out to the same situation over and over again, that instead of saying that, okay, these two bottoms just got created around here, this is a perfect double bottom, this is an indication that, okay, price is going to make a reversal around here. First of all, simply just wait for the confirmation from market structure. Secondly, wait for price to break and close above a 4-hour candle close above 58,800, and this would be your indication that, okay, I should be ready to deploy cash into the market. Okay, the next thing you would wait to see is price flipping this resistance area. Okay, then consolidating a little bit, and then coming back to retest this level. Okay, so you would once again wait for the flip of this level, wait for the consolidation part, wait for the retest part, and then you would enter into a long or a short position. In that situation, you would have an extra cover that, okay, this is not just the first retest of this support, this strong daily support, but this also is going to be the first retest of this double bottom neckline as well. Okay, so you could simply just place your stops a little bit down below, and then you can target the new regions ahead. Okay, so we do have, although we might simply, I'm not denying the fact that this is not a tradable double bottom. I'm absolutely not denying this. I'm just saying that it's still in the process of formation. It could simply just turn into a triple bottom. Okay, what we must do is that we must wait for price to break above the neckline, and that's the neckline around here. But that's not really enough, because you would wait for the neckline break, then you would wait for the structure break, then you would wait for this resistance break. All these three things you would wait for, which would simply just be the flip of this level, and then you would wait for the consolidation part, meaning you wish to see price not just wicking above in this area, not just giving like 2 to 3 candles above this resistance area, but you would wish to see price just staying comfortably above that spot, okay, just staying comfortably above the 60,000 resistance area. And then you would wait for the retest part, and the time of retest you would enter into the position. Okay, that's where you would have the best possible confirmation around this spot, in my personal opinion, that where exactly price is headed towards. Obviously the first target is going to be these two equal highs, and by the way, this could have been a very good short position, because if you would look at the structure part, you could have simply taken out your fib tool, draw your fib tool from this swing high to this swing low, which is once again the start of the impulsive wave and the end of the impulsive wave. You could have taken a short position around 70.5 or 61.80 fib level. Or alternatively, if you are a simple man just like me, you could have applied the simple man theory. I'm a simple man, I see two equal highs, I take a short position. Okay. I'm a simple man, I see two equal lows being formed, two relative equal lows being formed, I would take a long position. It's as simple as that. So in both of situations, uh, you know, if by the way this is Binance US chart, if you would open up the Binance spot chart, you would notice that there are two equal highs, two absolutely equal highs created around here, which may serve as very good target for any position that you would be taking around here. So your first target, it's going to be at around 63,800, and your next target obviously is going to be at this area, because that's the absolute target for this move, in my opinion, straight away to 72k. Since this is Binance US chart, it may look slightly different, but if you would open up the Binance spot chart, there are absolutely two relative equal highs created around here. Okay, which was once again the reasoning behind taking a short position around here. So finally, let's talk about a very important thing, and that's a liquidation event, right? So exactly like 2 to 3 weeks ago, if you were to ask somebody that what exactly is going to happen with price for BTC, they would be saying that okay, price is simply just headed towards 72k, we're going to break above 85k, we're going to $100,000, and nobody would have admitted that okay, we are going down to 53k, 54k. Even if you were someone who's asking me, I was a little bit biased towards price going down to 53k, 54k. I would be honest with all of you. Okay, but now that we have finally retested this level, a very important thing that we need to pay attention to is the liquidation event. So the biggest possible liquidation event that had to happen, it has already happened at 55k. I was actually a little bit surprised, seeing that price actually went down to 53k. Okay, 53.5k, because the biggest liquidation event, it had already happened at 55k. So there was, I was jokingly saying this to someone, that there was no point for market makers to drag the price down to 53.5k, because the majority of the people, they were already liquidated at 55k. Okay, so for those of you who don't know, just to share some quick few stats, that when price went down to 55k just 2 to 3 days ago, that was a single second largest liquidation event in the history of crypto. Okay, the first one obviously was FTX, but this was the second largest liquidation event. So that's not a normal thing. Once again, that price went down to 55k. You can actually imagine the scale, that how many people were expecting the price to go back up to 72k, and how at least 99% of them had no expectation that price would go down to 53k, 54k, because price was absolutely holding too strong in that in around that daily support area. But once again, that did not happen. We finally broke below this level, and that may have been, looking at that or foreseeing this would have been only possible if you were to pay attention to the structure part. Okay, so talking about the liquidation event, we know this thing, when market is bullish, then in that case all these liquidation events, they are being absorbed nicely. Okay, I just did a tweet as well, just yesterday, that who exactly is absorbing all this selling pressure, because just yesterday German government once again just in a matter of few hours, liquidated $985 million worth of BTC. This was the single largest liquidation in one day. Okay. So, by the way, if you're not following me over Twitter, please make sure to do so. My handle is Sherlock. I do occasionally share, free signals on my Twitter account as well. So yeah, you can simply just follow me there. I make sure to share, free signals over there as well, and you can also join the Discord server as well. Anyway, so talking about the liquidation event, uh, you know we already know that a major liquidation event, it has already happened at 55K, and the next one it's supposed to happen at 72K, 73K. But the point here is that, whenever these sort of liquidation events happen, we know this thing, and they are, whenever they lead to huge buybacks, we know this thing that, some entity or some institution or the market makers, they are absorbing all of this selling pressure. And I always say this during my live stream, that people have a negative impression towards market makers or institutions. We get to hear this all over crypto Twitter space that, okay, market makers liquidated most of the long positions and most of the short positions. But a very few people actually understand that, they are not doing this out of some bad will, but they have a responsibility, or you can say, they have a sort of compulsion to do so. The reason for this is because, let's suppose you are bullish on BTC. You are an institution who is bullish on BTC. Let's suppose that, price is sitting at $45,000 region, and, you are BlackRock, and, you are bullish on BTC. You know that, okay, price, ETF, it's going to get approved, and price eventually would go up to 72K, 73K, and you are going to make decent profit of it. But this thing, we have been hearing this for the past few months as well. you know all of these things, they are not, I'm not saying this out of air, all of these things are absolutely documented, all of these things are absolutely reported over the news channels also, that there has been a massive supply shock in the market. There has been a massive supply shock in the market just 2 months ago, when the ETF got approved. It was all over the news channels that, Coinbase BTC reserves, they were actually down below the 2015 levels. If I just try to put this in the simplest possible words, then there were not enough BTC, for these entities, for these institutions, or for these market makers to buy. Even if they were bullish, just imagine that, you wish to buy $10 billion worth of BTC. But if nobody is selling, then who would you exactly buy from? Okay. And there is a lot more to this. Market makers or institutions need to do it in a way that they don't really disturb the price, that they don't really make the price deviate significantly. They need to hide their orders significantly. And when would it happen? Only when a major liquidation event is happening. So if I have to put this in the simplest possible statement, that if you wish to buy BTC worth a big amount, and if nobody is selling out in the market, who would you exactly buy from? Okay. So that's how the major liquidation events happen. Whenever these major liquidation events happen and they lead to huge buybacks, then this obviously means that some institution or some entity, they are buying, and they are absorbing all of this selling pressure. Even just yesterday, German government, once again, they liquidated $985 million worth of BTC, and price barely dipped down to, this was the candle I'm talking about. This is a 4-hour candle. So just yesterday, price was trading around 57,000. The price was trading around 57,000, and then, the news came regarding German government liquidating the $985 million worth of BTC. And just for information, those were not limit orders, those were actually market orders. And price immediately went down to $54,000 and then went back up. Which means that even though a major sell-off is taking place, somebody or some entity or some institution or group of people, they are absorbing this selling pressure quite nicely. And if I say this to you, that, if you open up the crypto Twitter space, all of the retail people, if I ask you guys, there are like, 60 to 70 different people watching this stream. If I ask you guys the same question, are you bullish on BTC or are you bearish on BTC? Are you actually scared? Then almost 99.99% of them would say that, okay, they are actually a little bit scared, because price is sitting on a very on this daily support, and it has already gone down quite a lot. So, a lot many people, they're actually scared. So if you talk about the retail traders, they're absolutely scared. And it's not really possible for retail, to, just with all the FUD that's going around, it's not really possible for the retail traders to absorb all of this selling pressure. So definitely some entity, definitely some institution or a group of institutions, they had to create this major sell-off. They had to trigger this big liquidation event in order to absorb all of this selling pressure. You would only be able to buy when everybody around you is selling, and that's when you can simply just make the market continue in its original direction. Okay, it's as simple as that. Since after this major liquidation event, prices recovered a lot and in a very short period of time, and we have this historical double bottom pattern being printed out on the chart, I believe that this may very much be the bottom for this move. I would give it at least 60% chances. I would give it at least 60% chances that this might be the bottom for this move. It would increase to, the chances, in my personal opinion, they would slightly increase to maybe 75%, 80% as soon as we have structure shift happening around it. And they would significantly increase to 90% or 95% as soon as we flip this level, because flip of this level, it is extremely important for me, because price is trading around this very strong major resistance area, daily resistance area. You can actually imagine the scale of it. It took us quite some time for us to break below this resistance area. We had the first below this level, we had the first bounce, the second, third, fourth, fifth, sixth, then there were multiple bounces around here as well, and then there were multiple bounces around here as well. So it took us quite some time for us to break below this level, which means that it's a very strong resistance area now. And price is consolidating comfortably below this resistance area, which is actually a sign of worry, because price is staying below in this spot. And there is once again 80 to 90% probability that price would go back to this level and have a strong rejection around here. So instead of simply just buying blindly as soon as price breaks above 58,800, you should take out your fib tool, draw your fib tool in this impulsive wave as soon as a change of character happens, and wait for price to pull back down to a certain level, and that's where you can actually enter into a long position. I would still not recommend taking a long position, because anything could be happening, and we have to talk about the bearish scenario as well, okay? Because this is once again not a game of probabilities, but this is a game of certainties. I cannot sit right here and say that okay, price is definitely bullish, and even if the structure shift happen, even if price flips 60,000 level, we are absolutely bullish and we would go to 100k or 150k. uh, this is a game of probabilities, right? We need to talk about all of this in terms of probabilities. And a lot many people on Twitter, a lot many analysts, they are pointing out towards the possibility of price going down to 43k or 42k. But my question is that, if price goes down to 42k, $43,000 region, would you still consider this a bull market? Because if you would measure this correction, right from the top, people are talking about at least 60 to 70% of the people are talking about 42k, 41k. If you would measure this correction, then uh, that's like around a 43% correction. you know we are talking about corrections, right? We are not talking about huge dumps, and we are not talking about sell-offs, okay? So would you still be considering this a correction, or would you still be considering this a bull market? I highly doubt that, okay? Because for me, as far as I can see, based on my analysis and based on the bigger picture that I'm seeing around here, based on the things that I've mentioned to you guys, if price breaks below 52,000, 51,000, down below this support, we are no longer in a bull market. For me, that's a very big statement. As soon as it happens, I would just come right here, stream right in front of you guys, and I would say that okay, the top for this cycle, it has already happened. Okay, the top for this cycle, it would have already happened around 72k, 73k. Because for me, if we break down below this level, and even if we bounce at 42k or 41k or 43k, and then we go all the way up to 150k and 100k, that might possibly be a new cycle, or that might possibly be the start of a new cycle for me. And I would say that okay, the local top for this cycle up to 72k, it has already happened. So the point here is that you cannot simply, just like Capo, you cannot simply just keep on saying, keep on ranting that okay, we are very much bullish, we are very much bullish. People were bullish at, this was a bull market at 72k, this was a bull market at 65k. this was a bull market when we went down to 60K. This is still a bull market when we are down at 53K, and people are saying that this would still be a bull market when we would be going down to 42K, 43K. I have one simple question, that instead of just ranting that okay, this still is a bull market, why did we not take a short position at 72K and 71K? We could have ridden this whole position downside down to 42K and 43K. My question once again is that at what point we would start questioning, at what point exactly we would be doubtful that okay, if this is actually a bull market or not. Okay, there must be a threshold, there must be a limit, and for me that's 53K, 52K. If this first retest fails, then as per my analysis, price may go down to 36K as well, even 38K as well. I would no longer be bullish, okay, to put it in the simplest possible words. All right, so let's take a few questions also. A bit late to the stream, did I miss a lot? Yes, you did miss a lot, but since this live stream is over YouTube, so you would be able to watch it. So yeah, that's perfectly fine. That's like someone selling BTC to feed the crack. Yeah. What does mean by BTC electricity cost? I heard that it's around 60K. Yeah, that's another important thing. If you currently look at the mining costs, they are around 60 to $65,000. Okay, so if price is trading around $60,000 or $65,000, miners, they cannot really sell their BTC because they would simply just be going break even. Okay, if you are running such a big business, if you are spending millions into the business, you cannot simply just expect to go break even. When price was trading around $15,000, $20,000, a lot many people were saying that it would go down to $4,000, $5,000. But somebody like me who is aware of all of this situation, who was looking at the facts and not just saying that okay, we are absolutely bullish or absolutely bearish. I was the one saying that okay, the current mining cost, it is actually at around $15,000 to $20,000, and the system is designed in such a way that it needs to be equally beneficial for the miners and for the people buying BTC as well. Okay, miners are actually they mine BTC and then they sell their BTC. We are the people who simply just buy their BTC. So the point here is that any sort of system, it simply just cannot work if it's not beneficial for both the parties, for all the parties involved, right? If you are doing business with someone and that business is not really making you anything, would you really be doing business? Okay, you are in to the business just to make some profits, right? So similar in this situation also, a system cannot really work if equally beneficial. Okay, so in terms of mining as well, a lot many people at that time were saying that price would go down to 4,000 to 5,000 to 6,000, but I was the one saying that okay, the current mining cost at that time, it was at around 15 to 20,000. So if price went down to 10,000 or 9,000, the system would have became absolutely obsolete, right? The system would have became absolutely non-relevant. Okay, so it may have become absolutely non-beneficial for miners to mine their BTC. So similar is the situation here as well. The current mining cost, it may vary, okay, but it is currently at around 60 to $65,000. Some people estimate it to be around 50, $55,000, but that's these are the numbers that we have as of now. Okay, obviously we cannot have exact number. So if price breaks down below these levels, then the current system, it may no longer be beneficial for miners to mine their BTC, which means that the whole system, it may collapse. Okay, so that's why that's a very good indicator, by the way. That's where you can actually place your threshold also, that price may not break significantly down below this level. Political financial question: how much do you reckon a political election of Trump? Yeah, that's another thing in terms of politics and economics. We have not really talked about that. Probably we would be talking about that in the upcoming live streams. But lot many people are expecting the rate cuts. Lot many people, they're expecting lower inflation numbers. Just this week, a lot many people, they're expecting rate cuts in September. A lot many people, they are expecting a friendly, crypto friendly US government of Mr. Trump. this September, because elections are supposed to happen in September, and a lot many people are saying that okay, prices they would simply just be consolidating because there is no clear policy from the government, and all these stakeholders they're simply just waiting for rate cuts. They're simply just waiting for some bullish CPI numbers. They're simply just waiting for some crypto friendly regime, a clear direction, and the market it would simply just pump in September. And till then, it's simply just going to be consolidation. That's a very important belief, and I to some extent agree with this, that all the stakeholders they are still in some sort of, you can say, confusion as well, because inflation numbers they are not coming down. The rate cuts they are supposed to happen around September or October. Elections obviously are happening in September. If Trump happens to win, then obviously that would be a crypto friendly regime. It would be a good thing. So yeah, that's something we should be keeping an eye on. uh, if BTC breaks below 53K, we close on our sole spot buy position to as per the SL provide. Yeah, we would be closing the majority of our spot positions. Uh, Solana, I'm actually a little bit more optimistic about. We have not really talked about ETH. We would be talking about that tomorrow. It's expected that the spot ETF for Ethereum it may be launched in the next 1 week or so. Even it could be launched simply just tomorrow as well. But as soon as it happens, for me, Ethereum is absolutely going to outperform BTC, although it has a very similar structure. Currently it's currently trading under 3200 resistance area, but it still seems to be outperforming BTC. Okay, although it has not recovered that much, but since dominance is going down significantly, dominance has been sitting at BTC dominance has been sitting around at a certain resistance level and has been going down gradually. So I would expect altcoins not to go down that much until and unless dominance starts to do something crazy. Okay, so for me, our alt positions they would be they would be in a safer position until unless something really bad happens. Okay, until unless something really bad with the dominance happens. But yeah, we would be keeping an eye on all those things. We are holding the position on UNFI. Our first entry got failed, and the second one we are still just waiting for the third entry to be failed. Will you stream every day? Yes, I would be streaming every day possible. I would try my best to do that. It's realistic for Trump to get elected. If this is so, when would be a good time to start DCA into this? That's not really uh, that's not something I would say that possibly relevant in this situation, because Trump getting elected has nothing to do with our DCA, right? uh, Trump getting elected, it may be a bullish thing in a longer run, but it's not going to be a bullish thing immediately, right? What would be immediately bullish is going to be, some bullish CPI numbers and obviously the rate cut. So these two things that are possibly going to happen in September, these two things we would have to keep an eye on. Okay, Trump getting elected has an indirect correlation to market. It's not something that may have an immediate implication, that may have an immediate effect on what exactly market is going to do. Because even if you talk about Trump government, they were not absolutely crypto friendly, right? They were, although slightly more friendly towards blockchain and crypto compared to the current regime, but yeah, they were not absolutely crypto friendly. So it would be a little bit unfair to say that okay, market would straight away jump to 100K or 80K as soon as Trump gets elected. But your views on the alt season, we would have to talk about that in the upcoming live stream, because we would have to take a look at ETH, we would have to take a look at dominance, we would have to take a look at a few other things. Currently the situation with the altcoin market, it's not really that good. Okay, because a lot many of these altcoins they are even down below the 2015 or 2022 bear market levels. Okay, which is an absolutely ridiculous thing. So one thing is for sure that you still have a very good chance to buy, but you need to buy as soon as you have a certain confirmation. Once again, you cannot simply just try to DCA into your altcoins, alt bags. You cannot simply just try to buy into all of these altcoins blindly. You need to wait for some sort of confirmation. For example, the market cap, for the altcoins. For example, the BTC dominance. For example, the market structure for BTC and the rest of the things. We would be talking about that in the upcoming live stream. Possibly, I would try my best to upload a video on that as well. How do you DC into your trades? I usually use 33.33 at each level, which means that equal amount at each levels, just to just to avoid any sort of confusion. Love the quality of the stream on YouTube though. Thank you so much, Ray. Thank you so much. Really appreciate that. This is something I have been wanting to hear for quite some time because I have really invested a lot into this setup. So it's actually a very good thing to hear that the audio quality and everything is perfect. Let me take all of the questions quickly. When drawing support and resistance levels, are you taking only candle body closes into consideration or also the wick? Okay, so this is a very common question. Whenever you are drawing support to resistance levels, always remember this simple fact that these support and resistance levels, they are simply just ranges, right? They are not horizontal levels. They are not absolute horizontal level. They're simply just ranges. So candle bodies, candle wicks, they don't really matter. Just try to draw your support and resistance in spots where you have the maximum possible touches. Candle bodies or candle wicks, they don't really matter. Okay, that discussion is absolutely non-relevant. You need to draw your support and resistance levels in the regions where you're getting the maximum possible touches of these candles. Okay, this is the first thing. Secondly, you need to start trading these as zones. You need to start trading them as, not as levels, but you need to start trading them as zones or simply just ranges, right? Which means that you cannot draw your support and resistance level using your horizontal line. Instead, you need to draw them using these rectangular boxes. Okay, at what level should we start? Okay, I have already answered this one. So who liquidate the market maker? FTX actually, this is a very beautiful question. I would say FTX was something that liquidated the majority of the market makers also. Honestly, Discord ones are no comparison to this. This is so crystal. Yeah, definitely. YouTube live streams are uh, they're definitely a good idea. Okay, so it's time for the giveaway. You need to be following me. You need to have subscribed to my YouTube channel. Okay, this is the first requirement. For those of you who are watching the live stream, once again, we would be giving away the 5 free premium monthly membership for Foxian. That's my Discord server. That's where I basically share my analysis and everything. That's where the major of our most of our analysts, they share their signals and all those things. So we would be giving away 5 free premium monthly memberships. All you have to do is simply just subscribe to my YouTube channel, turn on the notification bell, and simply just go over to my Twitter and like the pinned tweet, and you should have followed my Twitter account as well. And after that, you can simply just join the Discord server. Let me just share the link of the Discord server with you guys. You can simply just join the Discord server, and you can open a support ticket, and we would be giving away the premium membership to you. Okay, we would decide the winners randomly. Okay, so if I just repeat the steps once again, all you have to do is just to have subscribed to my YouTube channel and be following me over Twitter, and you should have liked the pinned tweet. Okay, that's the only thing. And after that, you can simply just go to Discord, join the Discord server. Let me share the link with you guys. Okay, this is the link for the Discord server. You guys can simply just join the Discord server, open up a support ticket, and share the screenshot that you have already followed me over Twitter, that you are already subscribed to my YouTube channel, and we would be selecting the winners for the giveaway randomly. Okay. Once again, thank you so much, guys, for joining in. I really appreciate you guys taking time to join in and communicating. Once again, thank you so much. Take care and have a great week ahead. Thank you. See you guys tomorrow.